Welcome to the Market Action Podcast for Monday, May 20th. Today's story is how President Trump could drive a rally in the U.S. dollar despite his wishes. Hello, this is David Russell for TradeStation. In the last week, attention has turned sharply toward President Trump's trade war against China. An unintended consequence of this effort could be a rally in the U.S. dollar, which could go against his other purposes. First, a recap of the trade situation, because a lot has happened in the last week. Tariffs not only increased, the White House also blocked U.S. companies from selling to Chinese tech giant Huawei. Then Google stopped giving the firm Android support over the weekend. That's a major obstacle in its campaign to become the world's top cell phone maker. Semiconductors crashed because it cast a shadow over smartphone demand. The market was already looking saturated, and now things are even worse. It also raises questions about the upgrade cycle to 5G networks. Bad news for other tech stocks. But the real impact of this conflict seems to be much broader. A slowdown in the global economy while the U.S. remains on solid footing. Consider these recent headlines. A German survey of business sentiment called the ZEW fell more than expected because of weakness in China, one of Berlin's top trading partners. Then today, the country's Bundesbank predicted an economic slowdown. Chinese industrial production, retail sales, and fixed investment all missed estimates last week. There are also anecdotal reports of Chinese shoppers cutting back after years of steady income growth. Asian countries that do a lot of business with China are on the ropes as well. South Korea's unemployment spiked more than expected, and Singapore's non-oil exports cratered 10%. The Philippines Central Bank also took steps to bolster its economy. Meanwhile, the U.S. dollar has been inching upward, making steadily higher highs and higher lows. So far, the market doesn't seem to care because it hasn't really moved that much, and the U.S. dollar is still in the tight range. But if it breaks out, traders might look for a run back to the late 2016 highs immediately following Trump's election. That in turn could have an impact on stocks. Foreign indexes, especially emerging markets, are already suffering. Ironically, the allocation of Chinese stocks in global portfolios was more than doubled this month by indexing firm MSCI. U.S. companies with lots of global exposure could also find themselves in the crosshairs because a stronger dollar lowers the value of business overseas. Latin America and Brazil in particular are getting hammered. The country faces the same kind of global negativity as China and Europe, along with concerns that President Bolsonaro will fail to deliver on his pro-business reform agenda. Russia, another big emerging market, also missed GDP estimates by a mile. But another loser if the U.S. dollar keeps rising could be at 1600 Pennsylvania Avenue. After all, one of President Trump's biggest goals has been to revive U.S. manufacturing by increasing exports. So far, he's had some success, but further gains in the greenback could make imports cheaper and make it harder for domestic firms to sell overseas. So it's a tough balancing act for the president. In conclusion, currencies have been amazingly stable this year, despite weakness globally and massive uncertainties about trade. It's almost like foreign exchange traders refuse to believe what's happening economically and politically. But how long will that remain the case? We're not making any predictions, but investors may want to at least recognize the risk of a big move in the U.S. dollar if the currency market wakes up to these new realities. Thanks for listening to the Market Action Podcast. Please visit our news page at insights.tradestation.com and sign up for email alerts.
The preceding podcast was for educational purposes only. All of the symbols and trading ideas discussed were for demonstration purposes and not recommendation. Active trading is not suitable for everyone. You can find additional disclosure information on the TradeStation.com website. Thank you for listening.